Hi, everyone. This is Jeff Prasen with Interactive Brokers Podcast, and it's my pleasure to welcome back NASDAQ's Michael Normyle for his monthly podcast with us on the economy. Hey, Michael, how are you?
Doing well, thanks. Glad to be back.
It's great to have you back. Today, we got a pretty exciting subject. I know probably almost about 11 months ago to the date, we talked about IPOs on our podcast, episode 209, IPO trends and forecasts in an election year. But we're going to revisit that subject with the IPO market roaring back this year with, I think, 288 listings, raising $52 billion. Michael, what key factors have driven this dramatic turnaround compared to the relatively quiet 2023-2024 period?
Yeah, so this has been a really strong year for IPOs, even though we still have a couple months left. Like you said, 288 listings, $52 billion in capital raised, and 184 operating company IPOs. So these are all the best that we've seen since 2021. And like I said, still 2 months plus to go here. As to the why, I think it's a culmination of improvement over the last couple of years where things were relatively quiet in 2022 and 2023. But then there was improvement in 2024 and further improvement this year. So I think there was some pipeline building up in recent years. And after some volatility earlier this year, we've seen a lot of positives that make IPOs more attractive. Another year of strong returns, improved valuation growth, but still low volatility. After some volatility earlier this year, we saw it come back to low levels. At the same time, we've got the Fed returning to rate cuts, and then investor confidence is staying high. So even though a lot of these factors were in place last year, seeing it for another year, I think just adds to confidence among companies that are considering IPOs.
And your data shows larger IPOs have generally performed better post-listing. What advantages do these bigger companies have in today's market environment that the smaller IPOs might lack?
Yeah, so first, I think companies IPOing this year have outperformed the broader market as a whole on an IPO cap weighted basis. Companies that IPO this year are up 21% year to date. That's better than the S&P 500's 15% gain. But within companies that IPO this year, we've seen companies with bigger day one market caps and bigger IPO capitalizations seeing stronger returns to date from their IPO this year relative to companies with smaller market caps and smaller IPO caps. So looking at market performance in recent years for already public companies, that returns have been driven more by fundamentals, meaning actual earnings than multiple expansion. So I think when we see these bigger companies go public, they generally have a better chance to have already established those earnings than some of the smaller companies. So they're giving investors what they wanted to see. And I think that's a factor that's contributed to returns. Plus, some are in sectors that have really seen tailwinds this year, like AI and crypto, for example.
And Michael, we're obviously in the middle of a government shutdown, and it's temporarily halted the U.S. IPO market, among other things. But how much does disruption affect the pipeline and sentiment, especially since it's really extended well beyond historic average of 8 days?
Yeah, so we're actually now at the second longest shutdown in history. So the question is whether we'll pass 2018 to 2019's record 35 days. But technically, the SEC actually created a path for companies to IPO during the shutdown. Companies can provide a range of prices for their IPO instead of the typical fixed price. The risk for companies is that they need to wait 20 days from their IPO registration instead of the usual 7 to 9 days when the government's open and things are operating normally. That means this extra wait time just creates more risk for some exogenous factor that could turn market sentiment more negative, making the IPO timing less optimal. But we have seen some companies take this route still. The risk for companies that opt not to use the SEC's path, though, that means that they might need to refile their financials, which would delay their IPO. So, for example, June 30th financials can only be used until November 12th. So we might see delays where companies need to submit their September 30th financials. Ultimately, though, I think if we see markets holding up, there's a good chance that there's just a bit of a soft patch while the government is shut down and those delayed IPOs go ahead once everything reopens.
And I want to visit an area that maybe some of our listeners aren't too familiar with, Stockholm and their IPO market. They've actually raised nearly 6 times more capital than last year, despite having fewer listings. What makes the Nordic markets particularly attractive to companies seeking to go public right now?
NASDAQ Stockholm is seeing a lot of the same positives that the US sees. They've had the strong returns, strong valuation growth, but also low volatility, while still showing economic resilience and improved sentiment. So those are all more of the cyclical factors, but there are also structural factors that make Stockholm in particular stand out within Europe. Bankers say that Swedes in general have a higher risk appetite relative to other European markets. And you actually see that where Swedish households invest over half of their savings in stocks, which is more than double the Eurozone average. Sweden is also really tech friendly, which has helped incubate some of the companies that have become global tech companies from Sweden. And then all these factors are why NASDAQ Stockholm raised over 6 billion euros this year, including the biggest IPO in Europe since 2022, which was over 3 billion euros. In comparison, the next most total capital raised this year for Europe is just over 1 billion euros.
And both the US and Stockholm IPO pulses indexes have risen for 5 consecutive months. Could you explain to our listeners why the pulse indexes are reliable indicators of future IPO activity?
Yeah, the IPO pulses, they help us forecast IPO activity in the US and Stockholm. And we update them quarterly in our Market Makers blog, which you can subscribe to on NASDAQ.com. So they both have 6 components, things that I spoke about earlier, mostly returns, valuation, sentiment, volatility, plus some proprietary data. And so each of these components was first selected as a theoretical driver of IPO activity. And then each was back tested against historical IPO activity to demonstrate empirically that anticipated future IPO activity. And so right now, most of these components are pushing in the direction that supports that IPO activity.
And we just discussed these 2 strong IPO performances, both in the US and in Sweden. Are there other global markets experiencing similar resurgences, or is this really just unique to the US and the Stockholm Stock Exchange?
Yeah, I can't speak to every market, but like I mentioned, Stockholm really sticks out within Europe as having a particularly strong year. And of course, the US is a global leader in terms of capital raised. Also, Hong Kong has had a strong year, but certainly the US and Stockholm really do stand out this year globally.
And the data that you guys produce, it shows in 2025, IPOs are averaging a 34% gain on day one, which is pretty incredible. How does this compare to like these historic patterns of IPO performance? Is this normal, or is this outperforming, underperforming?
It's definitely outperforming. So focusing on operating companies, and it's weighted by capital raise, that 34% number. They're up 34% on day one on average in the US this year. That's the second best average IPO pop, day one performance, IPO pop, whatever you want to call it, in the US going back to at least 2014. So the only year stronger was 2020 at 45%.
And beyond these headline numbers, what sectors are driving this IPO boom? Do you see any emerging trends? Is it all concentrating in one kind of area? And what are the types of companies choosing to go public now versus maybe last year or whatever?
The big leader this year is information technology, with over 50 operating companies choosing to IPO. And then there's industrials with more than 40, followed by healthcare with nearly 30, and then financials and consumer both have over 20. So there's a few trends in there with AI and crypto and aerospace, but you can see it's actually pretty broad based across a lot of sectors.
And last question, I want to end it with, you're looking at historical patterns, and IPO markets tend to be cyclical. So given now that we're like in a strong upturn, what indicators, if any, would suggest we're approaching a peak in the cycle? Or do you think they'll remain strong for a feasible future?
Of course, I say what to watch is the IPO pulses, right? And based on their forecast window, they're saying right now, at least the strength that we see is in place until early 2026. And again, that's at least, that's just based on how far, ahead they're reliable. But we'll have to watch the IPO pulses develop in the coming months to see if that strength is likely to continue beyond that. And of course, you can check that out in the Market Makers blog that we publish every quarter on this subject, but publish weekly on other topics too.
Michael, this has been great. Love having you come by the studio. For our listeners, for more from Michael NASDAQ, you can go to NASDAQ.com, or you can go to our website under education. You can listen to past podcasts, webinars, and every other great material that NASDAQ collaborates with Interactive Brokers with. Michael, thanks for swinging by.
Yeah, thanks.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. IPO investments carry substantial risks, including extreme price volatility, limited operating history, lack of liquidity, potential for significant losses, and uncertainty regarding future performance.